Hi there, welcome to this week market analysis. Now, before we jump into the charts, just very quickly update you and kind of remind you that this week we do have a Fed funds rate as well as FOMC coming in, depending on where you are, of course, past midnight today in Malaysia. So definitely you want to keep an eye on that. Be aware also that some of this analysis, especially on dollar related, may experience a wider volatility, okay, as we approaches the news as well as the press conference later on. Okay, so any trades they will take with regards and anything that have the dollar in it, okay, just make sure that you're aware of a potential upcoming news that may give you that kind of volatility. Alright, so with that said, let's take a look at some of the charts over here. Now, first up, we have the dollar index. Now, one thing that to keep you guys updated is previously we were anticipating this as a simple 1, 2, and then we'll expect this to go back and retest the high at 103. But from yesterday to today, what we've seen, okay, is that this little move up looks very corrective in nature, and we also observed that this little high has actually broken this previous one, which technically tell us that okay, this WXY may have been completed because this high has already broken, that it doesn't need to continue to go higher. And the other element, of course, is this is very corrective in nature. So right now it seems like we may be seeing a little bit more of the downside. Okay, and if I were to just shift this channel drawing, okay, we can see it in this format right now. So if we're looking at this perspective over here, then what it means is that potentially if we can see any decent small correction here, we may start to expect the dollar to drop a little bit more. Okay, and of course, just now we mentioned we do have the FOMC as well as Fed funds rate coming in later. That may of course give us a little bit more clue. Are we going to see a little bit more upside from here on, or are we going to just see the dollar moving lower? So for now, I'm actually maintaining a neutral perspective, okay, and just want to wait and see for more clues in terms of pattern structure itself. So if I take this to the euro, okay, so we do see right now again euro seems to be doing a little bit more of a corrective structure. So initially we were looking at, can we get this as a correction as the end of the double top structure, and then we get this little stronger push back down. But we didn't get it, but instead, we can't get a corrective move here. So maybe what can happen over here is this may start to go back and maybe tag the top again before that drop, right? So overall, again, we're neutral on euro dollar, and of course, on top of just the FOMC, we do have the ECB coming in tomorrow. So for euro dollar right now, I'm also maintaining a neutral perspective to just give it some time and see if we can get a clearer structure before committing to any particular trade. Okay, so this one nothing much. Pound dollar. Okay, so pound dollar update over here is that of course we don't really have a very clear structure as of previously, but we did get the market breaking off this recent high, and we can more or less take this as maybe a wave 4 triangle-ish structure, and wave 5 may be starting to kind of like develop. So yesterday we did get a pullback towards that 50 and 618, but this pullback here looks pretty impulsive. So while we're expecting more upside here, just be a little bit careful, because usually we want to pull back to be corrective in nature. We want it to come down slow. But this move down was pretty fast yesterday. Okay, so what can also happen over here? Of course, we may still see a reaction, but if this reaction is corrective in nature, then you want to be cautious on the buy, because then this can also start to drop, right? So do keep an eye on it. Again, as I mentioned, we do have the Fed funds rate, okay, which might create some kind of volatility on the dollar related move. But for now, we just stick to this primary forecast, where we expect if we get a decent bounce from here, we expect a little bit more upside for the pound dollar. Now, Aussie dollar, a quick update here as well. So previously we were expecting this as a simple 1, 2, 3, wave 4 and then wave 5 before the bigger correction. But of course yesterday move did not kind of stop here, but instead it went a little bit higher. And of course it invalidated our initial forecast of this being wave 1, right? So that kind of gives us a clue and says that, okay, maybe this is just a simple 3-wave move. Okay, so WXY, this little pullback comes back to its 50 and 618. And of course right now if you put in this channel, you can see very nice little rejection at the top as well. Okay, so at this moment here we're gonna update this entire view and we're gonna look at it as a 3-wave structure instead. So we have completed our initial WXY. We can get a little bit of reaction here. If we can get a little bit more follow through, then we can expect another 3-wave WXY to give us a bigger WXY. Okay, so we're remaining bearish. Okay, just a quick update on some of the labels here. And the idea here is we probably want to see a little bit more downside. A correction here will give us a sell setup. Now if you're a little bit more aggressive, of course what you can do is you can drop down to even on the lower time frame. You can get a little consolidation here, moving into, and of course building up into FOMC. Okay, you can use a breakout structure to look for a trade to the downside as well. Right, so that's on the Aussie dollar. And then we have the dollar Canadian. Okay, so dollar CAD here, right now the market is testing around at 618. Overall structure and direction, we're still expecting a little bit more downside to complete a minimum of a 1, 2, 3. Okay, so if you're looking at the short-term trade here, you can look out for targets around 3480 to 3440, and then we'll expect an upside from there on to complete the bigger 1, 2, 3. Okay, so this is on the dollar CAD side of things. I think most of this major here are basically seeing a little bit of volatility from yesterday's market. Okay, so some of this retracement here, ideally we want it to be slow, but yesterday it came back fast, right? So you can see this here, Aussie dollar over here, you can see this here. Okay, and even pound, right? Pound dollar, actually you can see this here pretty fast. So not the best and ideal corrective structure, but the market are currently still respecting some of these key levels around the 50 and 618 retracement. Okay, so keep an eye on that. Of course, depending on how aggressive you are in terms of execution, you may or may not get a potential setup, you know, again depending on your style and your technique of entry. Dollar yen, in fact some of the yen pairs are moving very nicely. Okay, so dollar yen update over here was yesterday we kind of saw this broke up, and we're basically looking at patient, right? Waiting and looking at whether the price will kind of retest the previous top. It came very close, did not really tag it, and then we kind of get a V-shaped reversal as of today. So dollar yen over here, we're expecting more downside if we can get a correction here. Okay, so I did not manage to catch the dollar yen trade to the downside, but I managed to catch it on pound yen. Later I'll cover a little bit so that you can also utilize the technique and understand the thought process of how we execute and look into trade opportunities, at least for me. Okay, so dollar yen here, we're looking for more downside, wait for decent correction, you can look for sell. In fact, most of the yens are doing that, right? So if you take a look at Aussie yen over here, very nice little rejection as well. Okay, update on Aussie yen. We'll cover the yens and then we'll move on to the rest. So Aussie yen, we have been looking at this pretty neat, right? So we're looking at this as a running flat ABC. You know, somewhere here we managed to catch the breakout. Kind of covered this a little bit as well previously, right? And we kind of get a very nice little move. Completed this WXY. You can see where the reaction is. Okay, so yesterday or the day before that, we're looking at after this impulse. If you did not catch the breakout here, we're saying wait for the pullback. Okay, and then our target is still there. We did not get the pullback, but instead the market just continued off impulsively, came into the zone, rejected off as a V. Okay, so this kind of similar to the dollar yen. Any kind of correction here, you'll be able to take this sell. Now I did not catch this at the very top because again, you know, it's very aggressive to be selling it, especially after this impulse push. So I did not catch this, right? But instead what I did was I caught the yen move on pound. Okay, and I'll just explain a little bit so that you can see and understand the thought process of why I managed to catch the pound yen but not the other yens. So pound yen here, basically you can see over here the structure is quite similar as well. ABC, 3-wave move, come into this territory around 100% and 1, 2, 3. Okay, and what I saw yesterday was more on the lower time frame. We entered the territory, and on this hourly chart, we can kind of see a divergence build up, right? So you can see this part here and this obvious divergence, right? So it's a very simple kind of execution technique. Okay, we enter into the zone, we have a little bit of a double top divergence structure, and then what I did was I just simply utilized a breakout entry point here, okay, around 170.90, and we kind of got that break, and right now it's moving pretty neat, right? So we're kind of riding about like 100 pips, which is really nothing much on pound yen. Okay, but because of that 100 pips opportunity, we kind of shifted stops to break even. Okay, and of course this one here, I'm not looking at just that 100 pips profit, but the target potentially coming back all the way to 165.50 area. Okay, so that's the idea behind the thought process, right? And hopefully that can give you some ideas so that in the future, if you spot something like this similarly, you'll be able to capitalize on that too. Okay, so those are the yens. Update on gold as well. Now gold, previously we were anticipating this as a triangle structure, and then we'll expect this to break off the trend line at the bottom. Did not happen, and yesterday the market basically bounced off the trend line, and then right now we're testing this area. So a quick update here, the overall direction did not change. We will not just shift to a bullish bias because of this mini impulse, because the overall structure still looks very corrective within this. And what we just updated is, instead of that triangle and then the drop, right now perhaps what it's doing is just a simple 1, 2, 3, and then somewhere around this area we might face some reaction, and we can still expect it to develop that 1, 2, 3. Okay, so short term here on gold, we're still looking at more downside. Okay, if you can get a decent rejection around that zone, or even you can apply the technique that we just covered just now, drop down to the lower time frame, spot for maybe a crawl divergence, you look for the breakout, that is fine too, right? So over here, short term, you can look for sell somewhere around 1950 will be a target. If you're more of a swing trade, then after this sell, you might want to then rotate to a potential buy trade. Okay, so that's on the update on gold. Crude oil over here, we were expecting a deeper pullback yesterday. Okay, it didn't really happen, the market just went off. So no trade, and then right now basically we are seeing the market testing the zone. Potentially this can be wave 1, and then this can be wave 2, and then more upside, right? So for now, we'll just see how the market is going to react here. Okay, same technique and principle. What you can do is you can go down to the hourly, spot for maybe a divergence or such things, double bottom, cross structure, some kind of reversal pattern, and then trade the breakout execution, right? So nothing fanciful, quite straightforward. S&P came back down, retest the 50 and 618. Okay, so again, this is quite similar to some of the major pairs. My suggestion is again to see if we can get a decent rejection. Okay, if you're aggressive, of course, this becomes your entry area. But if you're more conservative, then just be a little bit patient, especially if we have FOMC and Fed funds rate coming in later. Okay, last one to cover over here, we do have BTC, Bitcoin. So Bitcoin actually came back again, same thing, retesting that 50 and 618. This one may look a little bit more of a corrective retracement. So overall bias here is due to the upside. Okay, but we're just a little bit cautious because this may turn into something like that, right? So this may be the peak instead of the ABC. Okay, what can happen is this may be somehow of an internal wave 5 and then 3-wave corrective move. So it might break this, and then only reject back up. Okay, so we are open to that possibility. Okay, so just keep an eye on that as well, right? If you're trading Bitcoin, just be adaptive to the market, because if this starts to come down and break that, okay, it does not necessarily mean this will keep going, but it just means that potentially this may rotate into a bigger 3-wave structure, and we may still see more upside after which, okay, because this is still the impulse move that's controlling the directional bias. Okay, so that's all for me for this week's update over here. All the best, and we'll see you guys again in the next one.